Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended lower on region-specific developments. Major US equity benchmarks posted weekly declines as a strong US retail sales data and a hawkish US Fed Chair Powell's comment raised uncertainty on the path of future rate cuts. Asian equities declined across most major markets, led by China, Hong Kong, and Korea, all falling about 6%, followed by Indonesia, Taiwan, and Philippines falling between 2 to 4%, as the potential impact of Trump's policies and foreign investor outflows weighed on risk sentiments. Back home, Indian equities entered correction territory. The Nifty index declined on all 4 trading days of the holiday truncated week, taking the peak-to-trough fall to over 10% and the weekly decline of about 2.5%, driven by weak global sentiments, disappointing earnings reported, rising inflation, and continued foreign investor outflows. Since the start of October, foreign investors have now pulled out about USD 13.5 billion from domestic equities, which is the sharpest outflows on record after the October 2021 to June 2022 period. Broader markets underperformed Nifty index over the past week, with the Nifty Midcap index down 4.1%, while the Small Cap index recorded a 4.6% decline. Among sectors, IT was the only sector to post a weekly gain, while all other sectors ended in red, led by utilities, capital goods, and metals, each falling over 4% for the week. The Indian fixed income market had another volatile week, with government bond yields rising across the curve, driven by a sharp surge in US bond yields after US retail sales surprised on the upside and hawkish comments from US Fed Chair Powell and other members, while domestic consumer price inflation rose above the upper bound of RBI's medium-term target, which is at 6%. The 10-year government bond yield rose 5 basis points to close at 6.86%, while the 3-year and 5-year government bond yields changed by 3 basis points up and 6 basis points up respectively. INR gold fell 4.9% for the week, weighed down by rising US bond yields and strengthening US dollar. Brent crude oil fell 4% for the week to close at $71 per barrel on strengthening USD and waning demand outlook after the International Energy Association reported forecasts of a surplus of 1 million barrels per day in 2025, while OPEC revised down its demand forecast for the 4th consecutive month as demand in China remained soft. The INR closed flat against the USD at 84.41 per dollar as the impact of rising US yields, strengthening US dollar, foreign investor outflows were balanced by lower crude oil prices. Coming to macro updates for the week, the first was on India's consumer price inflation, which rose to 6.2% in October of 2024 compared to 5.49% recorded in the previous month and market expectations of a 5.8% growth. This also marks the highest inflation rate in over 1 year. The surge was driven primarily by rising food inflation as prices rose further for vegetables, oils and fats, and meat and fish, while price declines slowed for fuel and light. On a monthly basis, CPI rose by 1.34%. The second update was on India's wholesale price inflation, which also rose by 2.36% year-on-year in October after a 1.84% gain in the month of September and above market forecasts of a 2.2% gain. Primary articles saw faster price growth while food prices registered the highest increase since June of 2022, driven by a sharp surge in prices of vegetables, potatoes and onions. Meanwhile, manufacturing prices accelerated to a 3-month high, driven by faster rises in food products and rubber and plastic products. In contrast, fuel and power prices fell the most since August of 2023. On a monthly basis though, wholesale prices climbed 0.97% after an upwardly revised 0.13% growth in the month of September. Finally, India's merchandise trade deficit rose to USD 27.1 billion in October of 2024 compared to USD 20.8 billion gap recorded in the previous month and above market forecasts of a 22 billion deficit. Exports rose 17.3% year-on-year to USD 39.2 billion, driven by a broad-based increase in non-oil exports, which included segments like engineering goods, electronic goods, and agriculture. On the other hand, Imports rose by 3.9% year-on-year to $66.3 billion, a record high, mainly driven by higher oil and gold imports. That's it in this edition. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.